Welcome to another valuable podcast on financial education. Welcome to Master Investor Company. If you're new to our community, make sure you subscribe and follow us on all social media platforms. Look for the logo. As I always say, we all have an investor inside of us because we have to deal with money for the rest of our lives. Money is an instrument that we must use from the time that we are born to the time that we move on to the next life. And let me say something, even before we were born, our parents were already using money to buy things for us as we were arriving in this reality. So let's get started with today's topic. I want to be speaking about how to become a successful entrepreneur. We wrote an article on this a few days ago. You can find the written article on our website. I'm going to put the link somewhere on the description of this podcast. If you would like to get our digital ebook, How to Build Cash Flow with the Internet, I want to recommend you to go to our website and download it because it's going to change your perspective about money, business, and investing. It's going to give you the tools, the resources to help you build passive income. If you have an existing business, it's going to help you take that business to the next level because you'll be using the internet to get more clients that are willing to give you whatever you're asking for because you're solving the problem in the marketplace. You're solving the problem that they have. Targeted traffic is all about finding the group of people that want the product, the solution that we are offering from our business. So putting that in front of them so easy that they can grab and purchase is all about marketing. It's targeted traffic, okay? So how to be a successful investor. I want to start with this. Becoming a successful investor is often boring, dull, and technical, okay, to building wealth because there are many formulas to creating passive income, to becoming ultra wealthy, okay? Regardless of how much cash flow you wish to have per month, right? The formula is dull, boring, and technical. So a lot of times people do not stick to the investment plan. They get too bored because they're used to having fun. So if it's not fun, then they jump into something else. You must stick to a formula, and in order to pick the right formula, we don't need to reinvent the formulas because they are already there for us to use because they are proven to work, whether it's in real estate or any other asset class that exists. There are about 5 asset classes that exist, and we encourage everyone to diversify among the 5 different asset classes for passive income because passive income is king, okay? There are 2 types of income that we can get from investing: capital gains income and passive income. Within passive income, we also have an income that is called phantom cash flow, and that comes from the ability to see the income that you cannot see with the eyes. You have to see it with the mind. You have to understand the laws. You have to have the right team around you because that income comes from taxes, from losses, depreciation, appreciation, and many other strategies that we can use once we have our hands on an asset that is producing passive income. But in reality, there are 2 types of income that you can get. Like I said, capital gains income or passive income. Majority of people invest for capital gains because they don't have the financial education to acquire an asset that produces passive income, okay? So financial education is the key to building wealth, is your foundation, because without financial education, you will not be able to tell whether something is an asset or liability. You will not be able to read financial statements. And we all have a financial statement as an individual, okay? And every business and investment has a financial statement. And with that financial statement, you'll be able to tell the real story behind that individual, yourself, or the business that you're attempting to buy or acquire, right? Whether it's an investment or it's an existing business or something that you're starting out, everything that we want to invest on has a financial statement. A lot of people don't even know that. They don't even know that they have their own financial statement, whether you are in the poor class, middle class, or the rich class, okay? It doesn't matter. The financial statement will tell you how is your finance health, right? How are you making your money? It's gonna teach you about whether you have any assets on your asset column. Majority of people have no assets in the asset column, and this is what it's all about. It's building our asset column so that the passive income from those assets pays for our bills, living expenses, pays for any other expense that we have on our expense column, pays for any liability that we want to acquire or any liability that we have on a liability column. Majority of people, they have a lot of liabilities and they work at a job to create income, which is called earned income, which is taxed at the highest bracket. So they end up working harder and harder because they accumulate more liabilities, which requires them to pay more money to keep up those liabilities. Okay, there's nothing wrong with liabilities. I don't want you to get it wrong. There's nothing wrong with expenses. Actually, we always tell everyone in our community to increase your expenses. It's about spending more money successfully and wisely. Okay, it's all about putting your money to work hard for you into an asset that produces passive income so that it prints money legally for you so that you can pay any liability that you want. So don't live below your means. Always live above your means. Expand. It's not about shrinking. And always stay outside your comfort zone. Feel comfortable by being uncomfortable, because that's when we're growing, okay? Do self-development every day. Read an article, read a book, right? You can spend at least an hour or start with 10 minutes. It doesn't matter. Just read something about investing, business, and money so that you become an expert at the subject. You can speak the lingo, because words are the most powerful tools humans ever created. So just like a doctor or an attorney, a dentist, they all have their own lingo, okay? A businessman, a wealthy entrepreneur, a wealthy inside investor, aka master investor, we have our lingo, the money lingo, okay? So in the ebook that I recommended earlier on this podcast will teach you about the business lingo, because the last chapter has all the business words that we should know in order to build our wealth, okay? So get the ebook because it has over 500 pages long. It's filled with high quality financial education made simple. The chapters are divided so perfectly for you to understand and take in without having to feel overloaded with information, perhaps. And it's going to give you a roadmap to building wealth with different formulas to have passive income coming in from the assets that you control, that your company control, okay? So that's how I want to start before I give you the 5 key points on how to be a successful investor. Key point number 1, equip ourselves with financial knowledge. The key is financial knowledge. We will perform better when it comes to investing the more we know about business. The good news is that we have access to a wealth of resources thanks to the internet. Take the financial knowledge and apply it into our lives. We all have to start somewhere. We must enhance our investment education and choose a plan to create passive income. There are many different formulas to wealth. Like I mentioned, we pick the one that we like the most and we build an asset or acquire an asset that produces passive income successfully without us being in there. Otherwise, it's not an asset. The asset has to generate passive income even while we're sleeping, okay? And the way it's going to be able to do that is because either the asset is already doing that, because we are buying an asset we're going to acquire from another business owner that is selling the asset, or we're building one, right? And the way we're going to have an asset produce passive income is because a true business, a sound business, is a system of systems. That's why I always say you need to have the understanding of how to do it, and you need to also use the systems that are available to us, okay? The beautiful thing about becoming wealthy is that the new rules of money, the laws are there for everybody to use. It's not just for the ones that are already wealthy. It's for anyone, literally, to start utilizing the business laws that are in favor to the entrepreneurs and inside investors. Here are some questions to ask when we're looking at a real estate investment. What is the interest rate? How does the deal fit into a long-term investment strategy? What is the current vacancy rate if we're looking at real estate properties? What is the cap rate? Is there any HOA's history of assessments? What is the repair and management cost? How fast will I recoup my initial capital invested back? What is my infinite return on investment? When we speak about infinite return on investment, that's when we talk about when we recoup the entire invested capital back initially, okay? So if we invested a certain amount of our money into the deal, whether it's a real estate property, whether there is a website, whether there's a brand that we're building, how fast would I recoup that money back from the sales of the business? Every business is created to solve a problem in the marketplace. So we gotta understand that the business is supposed to deliver that product successfully through the systems that we have in place. And in return, we're gonna get our capital back that we invested. That business is gonna produce enough money to also pay the debt service if we have any debt, which I recommend that you do. Good debt, right? Good debt puts money into our pocket because the debt is used to invest in an asset that produces passive income, okay? That's good debt. Bad debt takes money out of our pocket. If we use debt to acquire liability, then it's bad debt because it's just taking money out of our pocket. So good debt makes us wealthy and bad debt makes us poor, okay? Know the difference. So don't be debt-free if you want to build wealth. Having good debt is the key to wealth. Having a solid understanding of finances will enable us to ask the proper questions and decide whether something is a sound investment. Key point number 2. Regardless of what we decide to include in our investment strategy, be prepared to make some errors along the road. We need to not be afraid of making errors, rather fear not understanding from them. So learn the lesson behind the errors that you're making along the way in your investing career. I always say the only shortcut that exists in life is learning from other people's mistakes. So that's why it's important that you are listening to a podcast like this and other business people around the world that are giving you the experiences that we have along the way on our career so that you are well prepared and you don't make the same mistakes. So you can learn the hard way, or you can also learn from other people's mistakes. And if you do that, then the velocity for you to build wealth goes up through the roof. It is important that we begin taking action towards our investment plan. The only way to have passive income is to have an asset in our asset column that works on its own because systems are in place. The internet is the perfect place to start by controlling digital assets. However, even in real estate, we will need the internet. The point is to start, and many do not because of the capital that they think is involved in building a successful business. When we have financial education, we understand the job number one of an entrepreneur is to raise capital. So the lack of money should not be an excuse for you to not start investing for passive income, because your job is to raise capital from the front end, from sales, right? From customers, and also from the back end, from the banks, private investors, etc. Therefore, we can raise capital from sales online if we choose a digital asset. Key point number 3, put a little money down. In other words, put some of your saved capital into your investment, into your brand, into your business, right? When you have your own skin in the game, then you take things more seriously. Having a grasp over the there are 3 reasons why this is important to be successful when it comes to investing. Until we have some money on the line, we are not in the game. Up to that point, it is all theory. We have to put our knowledge into action. Most people think but never do. If you do something, you make mistakes, and it is from our mistakes that we learn the most. Now, we know the right question to ask. A little money means a little risk, but a lot of money means a lot of risk. You can learn just as much from the mistakes on a little bit of money than you can on a lot of money. However, it's not the investment that is risky, it's the investor behind the investment. That's why I say invest in your financial education, so that you have no risk even when you invest your own capital. Why? Because you have studied the investment, and you know that it is a sound investment. You know that the business that you're building is going to succeed because you did market research, you find a problem, you're solving it in a unique way, you have innovation. People will come to you because even if the competition is selling or is providing a solution like yours, you're doing something different. You're providing more value with less resources, okay? So be different, be unique, stand out, but most importantly, solve the problem effectively. People want the solution. They need the solution right now. You need to give that to them in a form that is easy for them to take and solve that problem that they have. Have you noticed how interested you get in something when your money is at stake? Having money on the line helps us become motivated to invest our whole self in the process. Key point number 4, comprehend the true problem that is being solved. Having a grasp over the root of the problem, the very basic fundamentals of investment planning. That an asset puts money in our pocket on autopilot without us being present to generate the passive income, while liability takes money out of our pocket in the form of an expense. It's a major step to strategically and successfully invest for passive income. Now, expenses are not bad, like I said early on, and it is not about cutting expenses at all. Actually, we need to spend more money wisely so that we use all capital to acquire sound assets that generate passive income to pay for the liabilities, expenses, and any other expense in our financial statement. The ability to read financial statements is the foundation of true wealth. Key point number 5, diversify among the 5 asset classes for passive income. We invest for passive income. So when we talk about diversification, we are recommending everyone to focus on your first asset, right? Build it, acquire it. The assets making passive income successfully every day, spend your cash flow, or every week or every month, but you're seeing the cash flow coming in after all expenses are paid of that asset, right? So now you have one asset, let's say in real estate. Now you should learn how to invest that passive income into a different asset class. It could be commodities, it could be crypto, it could be digital assets, right? There are 5 asset classes that you can invest for passive income today. So they all require their own financial education. That is why it's critical that we invest in our financial education. But diversifying among the 5 asset classes will give us protection against inflation, will hedge against any economy crash, because as a master investor, we understand that the economy goes up and down, okay? And in fact, when we have financial education, we can actually acquire assets when the economy is crashing and everybody's panicking and everybody's pulling out and everybody's doing this. We gotta learn how to have more education than the 90% of the population, so that we don't do what they're doing. And it is very interesting, but a good point to notice when people are doing something is to do the opposite, right? Majority of people are doing this, you gotta do it differently, okay? Because 90% of the population lack financial education. They don't know how to invest. They don't really know about business. 10% of the population holds the wealth of the world. 90%, they're working hard for earned income and they have no investment strategy or planning. They just give money to a salesperson to invest it for them in the market and in one asset class. And they think diversifying is buying different stocks from different companies. That is not very smart to do when it comes to diversifying. It's actually very dangerous and risky because if the economy crashes, then you lose it all. Okay, so that's why it's important to read and apply financial education into your life. Okay, so there are about 5 asset classes that exist to invest for passive income. Just to recap, and we should diversify among the 5 asset classes, but we must choose the one we want to start with and work ourselves toward the other asset classes for our passive income to increase successfully. We can also seek business partners in other asset classes that we maybe feel more comfortable by investing with others that are already or wanting to invest in such asset class. So don't be afraid to look for partners to navigate into a new asset class. We always must keep in mind to invest for passive income. Remember, we can have 2 types of income that we can achieve when we invest on an investment that is sound, because if it is not, then the result is loss of capital, and we do not invest to lose capital here in our community. We invest to produce passive income, to receive passive income, okay, and get to infinite return on investment. That's when we recoup the entire capital that we invested initially back, and we still control the asset, and the asset still pays passive income into our pocket every single month. So it's basically money for nothing. We are literally printing money legally for free, okay? We have no money into the asset anymore. We have recouped the entire invested capital that we put in at the beginning back, and we're still receiving passive income, okay? Capital gains income is taxed at a higher bracket. There are several exceptions to make the gains tax-free in real estate. Passive income is tax-free because the laws favor the passive income, so you can minimize taxes for free. And when we use debt is tax-free because money is created with debt. So that's why it's important to use debt and invest that for passive income, because that way we are tax-free entities. There's a case study that was done that specifically says that the number 1 expense all humans have in their entire life is taxes. So if we can minimize that from the beginning, then we are already above the average human being who ends up paying a lot in taxes because they work for earned income, and if they invest, they have capital gains income, and they don't know how to use the law to minimize taxes on capital gains, so they end up paying a lot on taxes when it comes to their capital gains income, if they get any. A lot of times they don't get anything because if they invest with the wrong person, then they end up losing the entire capital that they invested, which is their hard-earned income that they work from a job. Okay, so you want to be able to put your saved money and your earned income into an investment that produces passive income that your company control, that you control 100%. Okay, because that way you can be in control over your finances. Okay. Passive income is key because not only is tax-free when we have a strategy in place, but it provides freedom for us. That is why here at Master Investor, we encourage everyone to work to build passive income. Rule number 1 of our community, we work to build passive income and make money work hard for us. Okay? Don't be a slave to money, be the master of money. Okay? Go to our website. I hope that this has been valuable to you. I'm going to recap on the 5 key points. Number 1, equip ourselves with financial knowledge. Key point number 2, start right now. Key point number 3, put a little money down so that you start feeling more responsible to have that investment work out for you. Key point number 4, comprehend the true problem that is being solved with the business that you are involved. Key point number 5, diversify among the 5 asset classes for passive income. I hope that you have learned something from this podcast. Let me know in the comment section if you have any questions. Tell me what you have learned. Tell me that you are going to start investing right now. And also make sure you download our ebooks. We have the 10 New Rules of Money. It's an ebook that is about 40 pages long. It's going to give you an insight of the new rules of money, which are critical for you to know, because majority of people are playing with the old rules of money, and those do not work anymore because the laws have changed along the way and money has evolved. Today, money is a currency. It's not backed up by gold anymore. Today, money is created with debt. Okay, so savers are losers, good debtors are winners. We also have another ebook. It's called How to Build Cash Flow with the Internet, Turn Passive Income On. That's the one I was telling you earlier on the podcast. That is filled with high quality financial education. It's a flagship product on our website because it literally will shift your entire mindset. It's good for anyone who wishes to create wealth successfully. You need to be held by the hand. You need to have mentors. You need to enter an inner circle that will push you and help you take massive action, okay? Follow us on all platforms. Thank you for listening. Again, bringing the good and bad news of money, the business principles that work in all economies. Stay great. Bye for now.